Hello everyone, my name is Moji. You're watching a Bitcoin bubble news channel. Other than that though, prices are going down. As the economy gets worse, we wouldn't be surprised if prices fell a little more everywhere. In that video, that was Cathie Wood. Hey crypto folks, nice to see you again. Bitcoin bubble emoji from the Bitcoin bubble also. If you haven't already, please subscribe and hit the like button. It really helps the channel and gets the movie seen by more people who can then learn about Bitcoin coin in the business world. Make sure you do that. That being said, today we're going to watch a new video by Cathie Wood as we move into the fourth quarter of this year. She talks about how worried she is about the market and how things could go down. So she talks about a lot of things that could make people dislike the markets. That would be bad for Ethereum stocks, the stock market, and all of those other things. To become positive again, she says we need to see one thing happen first. She wants to see Bitcoin and stocks reach new all-time highs. So I think you should watch this all the way through. This video has some great lines from Cathie, and we'll also show a clip after she talks. This video has a lot of useful knowledge. I already told you to watch it all the way through. Let's watch this clip. After 40 or 50 years, the VIX has been the fourth best way to measure how volatile the market is. I've been there for all of them. It comes in at number 4, following the tech and telecom bubbles of 2008 and 2009 and the 1987 crash. What does this volatility alert mean? Most of the time, it means that the market is having a healing moment or is already in one. It also means that something is changing. As you know, we've thought for a while that the Fed's decision to raise interest rates has caused the U.S. economy and maybe even the world economy to be in a rolling slowdown. Besides that, there seemed to be more of the carry trade, which involves borrowing yen, going on at that time. In other words, selling yen and buying dollars to invest in assets that earn more money than in Japan. So putting down the spread. The yen has been falling in value, which is another reason why this trade became so popular. That all changed quickly this week when the Bank of Japan raised interest rates more than most people thought they would and seemed more eager than most people thought they would to keep doing so. It looks like there were a lot of margin calls and sales of a lot of assets. The VIX has now settled down. Now we're not sure if the carry trade is over for good. According to JP Morgan, we're about halfway there. Even though there might be more instability, I think the Fed is now on high alert because the stock market seemed to be telling them to be careful, to keep prices higher for longer, make sure that inflation is gone. We've been saying for a while that inflation is falling much faster than the standard indexes show. The CPI is at 3.1 right now. In other ways, though, prices are going down. It wouldn't surprise us if prices went down, as the customer gets weaker in a wider sense. Now, why is the customer going to weaken or keep getting weaker? We think it's because businesses are losing the ability to set prices. There are two things they are going to do to save profits. They are going to fire people and speed up efforts to make the company more productive. The number of people without jobs will rise. We're hearing Chairman Powell talk about how that is making the Fed change its mind. Today, I think that the fact that the stock market drop has hurt people's net worth is another reason why the Fed will give up. One more thing to think about. The stock market should do very well as interest rates go down, but they won't stop a recession very fast. In fact, what will people and businesses do if they know that prices and interest rates are going down? They're going to wait. Now, we think that the market is very smart and already knows a lot of what I've told you. So we do believe that lower interest rates will be the main reason why the market moves from a small group of stocks that are very focused to a larger group of stocks that are spread out. This will happen once the carry trade is over. Also, I just said that new ideas solve problems. Because of this, we are sure that as AI spreads around the world's economy, efficiency will go up. In that clip, Cathie Wood talked about how she sees the market right now. But now I want to talk about what Raoul Pal thinks about the market right now. They both want to see some of the same things. In this video, you can see what we all say, but he comes to a slightly different opinion. What do you think about what Cathie says compared to what Raoul says? Tell me in the comments below. I'm aware that there's a lot of talk about it. A lot of that was priced in back in 2022, based on signs that looked ahead. We have the cyclical parts of the business, like slow miners and things like car sales, driven by the way business goes. The economy is still going up and down, some people say. Yeah, but look, it did roll down. Yes, it takes place at every cycle's low point. You almost always get this right. That's where we are now. You can see that there has been a second dip before the rebound over the last 20 years. I think that's where we are now. The markets I'm most interested in crypto and tech price based on liquidity and financial factors. So this is just noise. But since the economy is still pretty slow, rate cuts are pretty much a done deal. and things like unemployment are what keep them that way. I've said for a while that unemployment should go up. It's not going to get really crazy, but we're now past the jobless rate of the Fed member who is the most pessimistic. Now it's clear that rates should go down, and the Fed has made that clear. They might come sooner or later, and they might add cash in different ways. But no matter what, unemployment has been going up, which is important for the Fed, and inflation has been going down, which is also important for the Fed. That means everyone agrees that rates should be lowered, which lets money into the system. What took place is it all started when the Fed said, well, the market's starting to realize the Fed were going to change course, which led to the $DXY 10-year bond yields and Fed rate cuts. The Fed then changed course by saying they're probably going to cut at the next meeting. That made everything start. A lot of rate cuts are now built in. That wasn't how things were priced before, but I think that's how they should be priced now. Will it work exactly the way the markets think it should? I am not sure, but I believe that rates will drop to 2.5% or less this cycle. Remember that the everything code needs low rates because it needs to refinance the $10 trillion in debt. To do that, you need low interest rates and cash on hand to pay the interest on loans from earlier cycles. That's why the everything code is so important and why we keep going through the same thing over and over again. It's because we're deep into the borrowing cycle and need to pay the costs of refinancing the debt. It's been clear for a while that the Fed and all the other central banks need low rates. The Treasury needs cash on hand to roll that over and also turn the old interest payments into cash. The liquidity cycle and the debasement cycle, which raises assets, are both driven by interest payments being turned into money. As the business cycle goes down, people and businesses have more money, which is then spent. Investing more makes things better, which feeds into itself. When the dollar gets weak, things like developing markets do well. So gains are put back into the system, and the system goes